Investing. When did you first hear about investing? Maybe you are planning to retire early or resign from your job and get that financial freedom that you always wanted or afford the lifestyle that you've been dreaming for a long time. You may have heard the name Warren Buffett, who is legendary and famous in the field of investing. He started his passion for investing at a very young age and is now worth $100 billion. One of the biggest misconceptions of people is that saving money in the bank can make you rich, but people are learning as life is becoming harder each day. And having 3 jobs at the same time is not enough to sustain and build life that you want is becoming almost impossible to achieve. This is a time where financial gurus are becoming more relevant as well as the financial terms that we are now familiar with, like building your wealth or having investment portfolio, is now becoming the ultimate life goal instead of having a successful corporate career. Because yes, no one becomes rich by working 9 to 5 as wages are stagnating and inflation doesn't seem to stop. Financial markets are also growing and becoming more diverse with the boom of cryptocurrencies in the pandemic and its applications and investment features. As an ideal solution, if you are not into building your own business, investing can be a good alternative as your way out to secure your future and improve your life. I know you are excited to know more about our topic, so without further ado, let's get into it. Understanding the basics. Investing is the application of money to leverage on asset-generating resources, like securities that increase value in the long run. When we say capital, we are not only referring to money because time, effort, knowledge, and everything can also be considered as your capital. The main goal is to appreciate value and make returns as capital gains or a greater payoff. That means if you buy an asset today, you are expecting that in the future, it will be valuable and sold it in a higher price, giving you gains or earnings. As you put the money to work, you are building wealth with the help of time and the compounding effect. Albert Einstein once said, "Compound interest is the eighth wonder of the world. He who understands it earns it, he who doesn't pays it." Compounding is the increase of value exponentially over time. If you were given an option to take $1 million or a penny that doubles every day for 30 days, which option would you choose? The first option really sounds good if you don't have any idea or understanding of how compounding works. If you calculated the second option, then you will get over $5 million, which is greater than the first option, and the lesson here is when it comes to investing, you must patiently wait and grow your money. Investing may sound good, but it comes with risk because not all investments can become successful because of competition. In any competition, there will be losers and there will be winners. That means your investment may or may not produce the appreciation you are expecting, and the worst part is your investments may lose value. In investing, you must know the risk you are getting into because as they always said, you can't invest into something you don't understand and only invest the amount you are willing to lose. In modern slang, that means do your own research. Study the company and study what they are doing. Different types of investment. There are so many popular investment assets to choose from, but here are the common ones, and they are stocks, bonds, commodities, real estate, mutual funds, and ETFs. Stocks. Stocks is the most famous investment that you'll always hear. You hear it from your colleagues, you hear it on the news, and stocks are also in the movies. Stocks are issued by the company and sell shares to the public with the intent to raise funds for business operations. Purchasing stocks allows you to own a part of a company as a shareholder. When the company grows, the value of stock increases and may distribute dividends to shareholders depending on the company performance. Bonds? No, not James Bond. Bonds are sold by companies in countries that need to raise funds for growth and development. Bonds are loan money from investors that comes with a fixed income investment due to the fixed interest rates over a period of time. Bonds are considered less risky investment but not necessarily safe because all investments carry market risks. Commodities are raw materials that are used for manufacturing goods. Commodities includes agricultural, livestock and meat, energy, and metals. The value of these assets fluctuates depending on supply and demand and external factors like the pandemic. The pandemic has impacted the supply chains resulting to a production decrease in goods. With limited supply in the market, that causes a demand pull inflation that motivates prices of goods to go higher. Real estate, this is the kind of asset that millennials are having a hard time owning because it's getting more and more expensive as years go by. In the future, real estate is considered to be a social status and a luxury. Not many can't afford to own a land as we can see the rise of homeless people around the globe. Real estate are land properties whether it is vacant or occupied by buildings. The value of land appreciate over time. If you don't have any plans residing on your properties, you can rent it out, or if your family got a vast amount of land, you could also rent that to corporation in the form of contracts and you still own the land while it appreciates in value. If managing real estate properties is not your cup of tea, you may opt to Real Estate Investment Trust, or REIT, is a company that owns, operates, and manages income-producing properties. That means the company uses real estate to generate earnings for the investors. Mutual funds and exchange-traded funds is handled by an investment company and professionally invests funds from shareholders in a wide variety of financial assets. That means they are the one that chooses where to invest your money and regularly check on the asset performance to prevent loss. These investment funds are spread across stocks, bonds, real estate, commodities, and many more. As these funds are professionally managed, investments are diversified to spread the risk, This method is an effort to reduce the possibilities of losing your money. Before we continue with our topic, I wanted to take a moment to share with you my latest NFT art collection, inspired by Impressionism and available for a limited time only on OpenSea. I was inspired by the movement of Impressionism, which is known for its unique use of light, color, and movement that evokes a strong emotion. The Impressionist painter's approach is to capture the feeling of a moment rather than just depict it, and I wanted to bring that same sense of emotion and immediacy to these digital arts. Impressionism also reflects the fast-paced, digital world we are living in today, where things are constantly changing and the need to capture the present moment is crucial. This is why I believe Impressionism is still relevant in this generation. I am excited to offer my NFTs as a limited time opportunity for collectors. Each NFT is a digital representation of visually stunning artwork, inspired by the Impressionism movement. While they are verified on the blockchain and unique, I hope they will bring joy and a connection to art for the individual who owns it. They can be displayed on a digital wallet or in a virtual gallery, and it would be an honor to have my NFTs be a part of someone's collection. In addition to my NFTs, I also want to share with you my separate collection of digital art, available on Gumroad. These are unique, high-quality digital products that I have carefully crafted to be not only visually stunning, but also to convey the same sense of emotion and immediacy as my NFTs. Each product is high quality and can be downloaded instantly after purchase. These digital arts are perfect for those who want to enjoy my art in a more traditional way and also to support my channel. You can find the link to my digital products in the description box below. So, whether you're a collector or just a lover of art, make sure to visit OpenSea or Gumroad and check out my NFTs and digital art collection. These are for sale and available for checkout. Thanks for your support, and I hope you enjoy my NFTs as much as I enjoyed the creative process behind it. And now, back to our topic, getting started with investing. So, now that you have decided to make investments in any of these, the next step for you is to open a brokerage account. This type of account is an investment account that gives you access in a wide selection of financial assets where you can invest your money. We are now in the digital age, and you can open an account right at your fingertips. The best online brokers you can make an account with are Charles Schwab, Fidelity, E-Trade, and Interactive Brokers. It takes $0 to open an account. You can create it for free. However, the minimum deposit for your account varies depending on the broker, so you may consider checking that out. The legal minimum capital to trade stocks in the US is $25,000. However, not everyone has that amount of money. So there are other ways you can invest in the market with as little as $10, and that is with the help of fractional shares. Fractional shares allow you to own shares with a fraction of the amount. It is a portion of a whole share that is made available for small investors since the price is too high and outside of their budget. If you are into owning shares of giant companies like Amazon, Apple, Google, and Facebook, the cost may go as high as hundreds of dollars per share and may not be affordable for many. Besides, what's the point of going public if it's not available to everyone? Right, the more people can get access to these financial assets, the more people can invest to it. Investing versus gambling, what's the difference? You may think, am I just gambling my money with investing? And the answer is a straight no, because gambling is far different from investing. Gambling relies heavily on chance. There is no basis with gambling and more of a guessing game. In gambling, one thing is for sure, and that is the risk is high. No one can win consecutively with gambling. It's a zero-sum game. All the people who gamble in the casino knows this, and don't be a victim of the idea that you can become rich by gambling in the casino. Because there are people that became a victim of that mentality and have lost everything in their life because of gambling. Most people that gamble in the casino is just there to burn their money and have some fun, but with investing, you are putting money to work, and that money will be used for growth and development. If more money is being invested in a company, there will be tons of work to be done, like more projects are initiated, more hiring is required, more products and services to be offered to the public, and that means generating more value in the market. And that will make a company valuable, which will bring positive return to your investments. Historical data is also available where you can base your investment decisions, which is not available with gambling. Historical data is used to study the past and present performance to further improve decision and calculate risks. Investing allows you to spread risks and prevent burning of your capital, but with gambling you don't have the capability to do that. It's all or nothing. That's why gambling is high risks and far different from investing. The benefits of investing, why it's important for your financial future. Did you know that Warren Buffett started investing in his early age? He started investing in the stock market at the age of 11, and he never stopped investing up to this day. He was nicknamed the Oracle of Omaha as being a successful and legendary investor. Warren Buffett's net worth is approximately $100 billion. Now you might think, why should I care? Because investing matters and should be started early, but why? Because it's a lot harder to maximize your returns if you started out older. If you started out investing at your 30s, your result would be different from someone who started out in their teens. Unless you are taking action to build your own empire, then you can get ahead of the game. Many people have full-time jobs and still not making enough money at the end of the day. Investing matters because this can serve as your weapon against inflation. We see that inflation is always around, and because of that we see older people go back to work because their retirement is not enough to sustain their everyday needs. Everything is affected by inflation and all the prices are going up. Investments can serve as your vehicle to financial freedom and retire early. That's the reason why you must start at a young age so you can maximize your investment potential, because you have more time for your investments to grow like Warren Buffett did. Investing matters because this is the way to wealth creation. Even businesses invest to other businesses because they also don't want to miss out. Wealth creation takes time to build. You are utilizing these financial products to your advantage, and use time work on your favor to achieve an amazing phenomenon called compounding. Financial freedom is just an after effect of becoming wealthy. The ultimate goal in life is to become financially free. You have the luxury to live your life on your own terms, be able to focus on your life, owning your time, and living your life in abundance. At the end of the day, if you're still looking for the best investment, look no further because the best investment you have is very close to you. Your best investment you can have is yourself. It has to start with you. Building wealth is building yourself. Invest in learning new skills, skills that are related to building wealth. Invest in your health, because without good health, you can't appreciate the fruit of what you are building if your health is suffering. Join like-minded people and learn from them. Yourself is your biggest investment. If you guys enjoyed the video, please support my channel by smashing that notification bell icon so you get notified every time I upload a brand new video. And don't forget to comment, like, and subscribe. Be sure to check out my NFT art collection on OpenSea and my digital art on Gumroad so I can add a unique piece of art to your collection and to your life. That ends today's audio blog, guys. This is Daniel Cloud. Thank you for watching and see you on our next one. Bye!